Hey everyone, Couch Investor back on our earnings video for today. So we already covered Shopify's earnings this morning. If you missed that, it's going to be in the top right corner. Now Palantir, a triple beat. The company is now not just back on track. They are steamrolling through the roadmap. I mean, I just listened a bit to the earnings call. I already caught it at the end. This will be a two-part video because there's just too much to talk about. Palantir is firing on all cylinders. Alex Karp is fired up. He basically said on the earnings call, we're going to create software that is so good that the competition wouldn't want to create their own because they know they cannot compete. I'm not paraphrasing here, but this is basically the message that he wanted to put out there. They're saying they're seeing a lot of boot camps happening more now than ever before. I mean, the adoption rate is going to accelerate from here. Now, yes, we're talking commercial here. Government side is slowing down, as you will see in the numbers, but with government, things take a bit more time. Also, by the way, if you don't know, next year, 2024 US elections, so keep that in mind. Now, first up, I want to touch on a couple of things that were mentioned in the letter from Alex Karp. So first, he says here, we earned the most significant profit in our company's 20-year history. We generated net income of $72 million for the third quarter and $147 million on a trailing 12-month basis. The speed with which our company has shifted from losses to profits is a reflection of the power and sophistication of these software platforms that we have built and refined for years. With these results, our company is now eligible for inclusion in the S&P 500, a milestone that we have been working towards and knew was within reach. Now, when will that happen? We don't know. Our focus on profitability, however, will not interfere with our broader ambition and the growth of our business overall. We generated $558 million in revenue in Q3, representing a 17% increase from the same period last year. I'm not going to go over the whole numbers because we have the presentation for that, but I do want to go down here and talk about this. At the end of Q3 2019, the company had 2,358 employees and had generated $705 million in revenue on a trailing 12-month basis, representing nearly $300,000 in revenue per employee. 4 years later, by the end of Q3, they had a total of 3,810 employees and had generated $2.3 billion in revenue on a trailing 12-month basis, representing almost $558,000 in revenue per employee. The sharp rise in the productive capacity of our company is a reflection of the increasing strength of our software product, whose development only continues to accelerate. Now, why did I want to touch on this? It's because, well, there is still dilution happening at the company. I believe 12% year over year, while revenue is increasing 17%. So this is something to keep an eye on. But if you can generate more revenue per employee now than you did before, I mean, way more, then yes, this is something that I'm ready right now to take a hit on when it comes to dilution, because eventually I do think that they'll be able to buy more shares, which will definitely reduce the effect of dilution, and shareholder value will go up as the company's value go up as well. But this is definitely something to keep an eye on. Dilution, this is something we have to talk about each and every time. Stock-based compensation was basically flat quarter over quarter, but it's down year over year. Now, before we jump into the presentation, if you enjoy this type of videos, leave it a thumbs up, subscribe. If not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, with regards to the presentation, of course, they start with the message that everybody should have expected. Palantir stands with Israel. No surprise there. They chose the path of democracy already 20 years ago. So, let's have a look at how Palantir's software is impacting companies. Well, with regards to hospital operations, with regards to HCA Healthcare, our software is used by 16% of hospital beds across the United States. That's up roughly 1% from a year ago. We've been able to scale this across our acute inpatient units at 9 facilities, and we're looking ahead to the future. We'll be at 180 plus hospitals. That's 90,000 nurses strong. With regards to AIPCon, the customers unveiled their AIP workflows. So launched just 5 months ago, AIP is already used by nearly 300 organizations across sectors ranging from energy to finance, hospitality, and healthcare. Of course, keep in mind that the results, the effects on the top and bottom line here will take some time. Then with regards to the AIP bootcamps, by the way, they did say that they're going to increase the bootcamps. They're going to be way more, and it's much better to have bootcamps, in my opinion, than just to have sales calls. Basically, they say here from 0 to use case in 5 days or less. This is how you attract customers, not by calling them or offering better contracts or whatnot, basically showing them the results. Now let's dive a bit deeper, and you're going to see that commercial side is accelerating faster than the government side, and US commercial is accelerating more than commercial as a whole. So US commercial revenue is up 33% year over year, and it's up 13% quarter over quarter. As for the customer count, that's up 37% year over year and 12% quarter over quarter. And they've basically 10x the 3-year US commercial customer count growth. There are 102 US commercial deals closed, that's up 65% year over year. When you look at the US commercial TCV, that's $252 million. And by the way, TCV is total contract value, and that's up 55% year over year on a dollar-weighted duration basis. Now, with regards to profitability, in this case, GAAP net income and GAAP operating income, you can clearly see the major improvement, not just year over year, but quarter over quarter. A huge jump here for GAAP net income. Same can be said here for GAAP operating income. I mean, this company can now become more and more profitable while also growing. Because, of course, there were some fears that, well, they're going to focus on profitability because maybe they do want that S&P 500 inclusion, and so growth will be looked at as a second priority. But no, they've made sure to tell us that, look, we can be profitable. We can grow our business as well. Actually, we will grow our business, just wait and see. And so, US commercial revenue growth, 33% year over year. When it comes to government US, just 10% growth. Then commercial revenue, you see 23% growth for commercial overall. Government overall 12%. So in this case, government increased more than US, but US commercial increased more than commercial growth. Then as for adjusted operating income, that was $163 million, representing a margin of 29%. So they say here, we continue to invest aggressively in AIP and the US while driving operating leverage at scale. As for customer count and commercial customer count, so customer count overall increased 34% year over year, trailing 12-month ending at 453. As for commercial customer count, that increased 45% year over year to now trailing 12-month ending September 30th, 330. As for the closing of deals, so right now a jump here for deals at least $1 million. So that's 80 deals, 29 of which were at least 5 million and 12 of which were at least 10 million. I believe last quarter we had a bit more of at least 10 million, but hey, that huge jump here of 80 deals, maybe they start small and then start to make their way up. And then they ended the quarter with $3.3 billion in cash, cash equivalents, and US Treasury securities and no debt. As for cash from operations, $133 million, adjusted free cash flow, $141 million. And yes, before you ask me in the comments, did they buy back shares? No, they did not. And so, for guidance, so Q4 revenue of between $599 to $603 million, adjusted income from operation between $184 and $188 million, and of course, still GAAP net income. As for the full year, they are raising their guidance yet again, so it will come in between, well, at the midpoint of $2.218 billion. They're also raising the adjusted income from operations guidance at around midpoint $609 million, and they continue to expect GAAP net income in each quarter of this year. And by the way, net dollar retention, you can see it here again, very, very small, and now it's in another slide actually, unless I missed it above, but that was just 107% in Q3, impacted primarily by the headwinds of our commercial business in continental Europe. Maybe it's also because of SPACs and things like that. But yeah, net dollar retention 107% is not great. It has been declining for quite a while. And then last thing here with regards to SBC, stock-based compensation, look, it has been declining each and every quarter. Yes, now it's basically 3 quarters of it being flat. And so last thing here is the graph. Of course, we're now back at those levels, $17, $18 range where we got rejected before. $19 was also a rejection point back at late July. Right now, we've got even more momentum, I would say, with regards to the business fundamentally. So that's much better than just going up without a push from the fundamentals of the business, because it's always great to see your stock go up. But if it goes up without the business actually doing much better, then you are facing a risk of the stock crashing just a couple of weeks later on. Right now, yes, it's not the cheapest stock out there, but hey, looking at the numbers, listening to what they had to say during the earnings call, which is going to be the second part of this video, I mean, this stock, this company will do very, very well in the future. But of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.